Darn, it says unsupported get request. Hold on. I don't
Mine
know what that
says
means.
this meeting is being live streamed, so it does say
Right
that.
now.
That's what
Okay.
mine says at the top.
Hold on, guys, if you're here with us. Let me see where. Okay, it's going. So, hi everybody. Jenica Williams here with Keller Williams Realty, and I'm here with Kyle Ridenour, and he's with Guild Mortgage, and he's going to talk to us today about reverse mortgages and how they work. We're going to have some questions at the end, and I'll kind of pop in here and there. I know that us in the real estate community, I know I'm curious more about to hear more about reverse mortgages. We haven't had too many clients use them, so I'd love to be more educated. So this is kind of educational purpose for us to get to know them, get to know Kyle better, and just learn. So thank you for being here, and we can't wait
Sure.
to hear what you have to share.
Awesome. Thanks. Well, thanks for having me, Jenica. I really appreciate it. And I'm glad I can share some of my knowledge on reverse mortgages today. So, as Jenica mentioned, I'm with Guild Mortgage. Um, I have been originating and specializing in reverse mortgages for almost 14 years now. So, it's a loan that I really love doing. I'm passionate about helping the senior demographic find financial peace of mind with a reverse mortgage. And I really enjoy educating people on the program. So, like Jenica said, it's good to get the word out there, and the more people that know about it can possibly take advantage of it, the better. So, what we'll do today is I'll share a quick slideshow, and then as we go through it, Jenica can ask questions periodically, and then also at the end, she'll ask some more questions. So I should have this up and running now. So we'll move forward into the next slide. So what is a reverse mortgage? There's a lot of misconceptions, a lot of false information, unfortunately, that float around the internet, or just hearsay about reverse mortgages. So today we're going to really just talk about the facts and what a reverse mortgage is. So a reverse mortgage is an FHA insured loan that allows homeowners to convert equity in their home to available cash to use just for about anything they need. It's tax-free proceeds, which is one of the biggest benefits. It's not considered income, but it can be used to pay off debts, to use it to travel. You can use it to cover medical expenses, to upgrade your home. Just about anything you want, you can use the reverse mortgage funds on. So a HECM is the acronym. It stands for a home equity conversion mortgage, and this is the main type of reverse mortgage that's out there on the market. It consists of probably 90% or more of all reverse mortgages. It's been around since the 1980s, so it's a program that's been around for years, and it's federally insured through FHA and HUD. So that's what a reverse mortgage is. Now, the HECM eligibility requirements, this is a national program. So these rules and guidelines apply to every state out there. So there's three main items to qualify on. You have to be at least 62 years or older at closing. If you're married and you have one spouse that's 62 or older and the other one's under 62, that's still completely fine. We can do a reverse mortgage for them. You must own the title or own the home and remain in the home during the duration of the loan. So it has to be on your primary residence. Okay, you have to do this on your main property. You can have multiple properties, or you could travel, timeshare. You could be out of your home for up to a year, but you have to take the reverse mortgage out on the home that you live in primarily. You have to be current on all your property taxes and homeowners insurance. So this is just an FHA mortgage. It's just a mortgage. I like to keep it simple. So all the requirements, meaning you have to pay your taxes and your homeowners insurance, apply on this loan as well. You have to be counseled by an FHA or HUD approved financial counselor who specializes in this HECM program. So that's a nice consumer protection to make sure all homeowners understand the basics of a reverse mortgage before they start into the process. Um, and you have to have a good amount of equity in your property. So you'd have to have about 60%, 50 to
Have a good
60%
property.
equity
So
in your
you'd
home.
have to have about six.
Um, the home must be an FHA approved property, so it has to be a single family residence. Any 1 to 4 unit properties are going to qualify. Um, Condos that are FHA approved, manufactured homes that also meet FHA and HUD guidelines, townhomes do qualify as well. So any single family residence or dwelling will qualify typically. Age in place. So this is the term that's been coined for reverse mortgage because most homeowners who are 62 have been in a home for a few years. They've maybe raised their kids in the property, so they have a lot of equity. And this just allows them to live more comfortably for the rest of their life by using that hard-earned equity that they've built in their property. And it gives them peace of mind knowing that they're not going to be strapped down with a mortgage payment for the rest of their life. So touch on the requirements again. You have to be on title throughout the life of the loan. If one spouse passes away before the other, that's fine as long as we just have one spouse living in the home and on title. So you have to remain in the home until you both have moved out or passed away, and that's when the loan will be repaid typically. Borrowers are not required to make any mortgage payments, but they can if they wish. So we've coined it the flexible mortgage payment loan, where homeowners now want to take out a reverse mortgage and maybe pay some of it down a little bit. That's totally up to them and gives them flexibility of how often they make a payment back on the loan. But the biggest benefit I would say is never having to make a mortgage payment. So if you don't want to, you never have to over the life of the loan. And you must stay current on your property taxes, homeowners insurance, and HOA dues. That is the minimum requirement to pay for the homeowner. We call those the property charges. You at least have to pay those at all time. Accessing the reverse mortgage funds. So there's 4 main ways you can access the reverse mortgage proceeds. The first one is the line of credit, and this is the most common. We do a majority of reverse mortgages set up as a line of credit because the borrower can take the money out at different intervals when they need it. However often they need to take money out, they're in control and it gives them a lot of flexibility. The term option would be where you can receive a set amount of funds each month for a certain time period. So you may be for 5, 7, 10, 15 years, however many years you want to set up receiving that monthly payment. It would essentially be like another form of an income for the homeowner. And we'll talk about a scenario that applies to the term later in this slideshow. The tenure option, so tenure, like a teacher would be tenured, you can receive equal monthly payments for the life of the loan. Think of this as a lifetime income as long as you're living in the property. So that's a great option. You can take a lump sum is the last option where you take an immediate cash payment, a cash out refi, if you will. You take the lump sum at closing. The nice piece about the reverse mortgage is we can tailor this to the homeowner's needs. Everybody's situation is different, so we can do a combination of any of these. Many homeowners will set up a line of credit, but only take 25,000, let's say, at closing to pay off some debts, and the rest of the money is in the line of credit for them to borrow at a later date. They could also take the 25,000 up front, just as an example, and then whatever's left over, they can set up in their monthly payment. So that's the nice feature about a reverse mortgage. It's very customizable. Reverse mortgages are a financial tool now. This is not a loan of last resort or a loan of desperation like some people think or have heard. It really is becoming more and more endorsed by financial planners and those that are helping people plan their estate for the rest of their life for their retirement years. Because housing equity is one of the major sources of the wealth of a senior homeowner today. So just like you'd have a portfolio with different investments, you could essentially use a reverse mortgage to complement that as another retirement tool in your portfolio. So that's a nice piece too to talk with your financial advisor about it. You'll see a lot of them are endorsing this product. We're just going to breeze through this particular slide because it's more high level And it has to do with when we talk to financial advisors on how a homeowner can make their retirement funds last longer. It's just showing an example if your investments in your retirement account have some down years. If you did a reverse mortgage in conjunction and you just borrowed from the reverse mortgage in those down years, how you could spread out your retirement portfolio to the tune of almost $400,000 more by using this two-way tool, I would call it, on a reverse mortgage along with your retirement account. So we would we just wanted to summarize that briefly for you. The reverse mortgage line of credit compared to conventional CDs. So this reverse mortgage has a growth factor in the line of credit. So if you have a credit line limit on a reverse mortgage, that will grow every year at about 6.6%, so close to 7%. This chart is showing that if you put 90,000 in a traditional CD or interest-bearing account, the savings, let's say, earning only 2.5%. In 15 years, that 90,000 would be up to 131,000 available to the homeowner. But if they had 100,000 and they had it in their reverse mortgage line of credit limit, it would grow in 15 years to $268,000 of available funds to the homeowner. So you can see it almost doubles your money there on what a reverse mortgage can do with turning your equity into liquid assets. Maximizing your asset growth using a reverse mortgage line of credit. So this chart is going to show the top section here, this top box. We just talked about this scenario. But if you were to allocate the funds more heavily into the reverse mortgage line of credit, so you'd put 180,000 in your reverse mortgage line of credit and only 10,000 in a CD, you'd have a total of about $550,000 in 15 years from that 190,000 original assets. Versus the tops scenario that we just discussed, you'd have about 430,000. So it ends up being about $100,000 difference if you utilize the benefits of the reverse mortgage to the best of your ability. So that's a really neat feature. One of the best parts about a reverse mortgage is when you set up the line of credit, it grows in your favor as a nice retirement tool. So this is the scenario where we would look at maybe taking a term of what the homeowner's eligible for. They might want to just take a 7-year or 8-year term of monthly reverse mortgage payments. And this would be if you're age 62 and you qualify for Social Security income, you might want to hold off on taking your Social Security till age 70 when you get the maximum benefit. We've done this many times for clients because over the long haul, again, it provides you a much larger benefit in your retirement years. So this top gray line here will show you that if you took the reverse mortgage just for 8 years and then took your Social Security benefit at age 70, you'd be receiving almost close to 900,000 in total payments over a 30-year span from age 62 to 92. If you took the Social Security at age 62, you would see you'd be only getting about 600,000 total benefit for those same 30 years. So it's a drastic increase on how much money you can take out and borrow on a reverse mortgage when you use it as a planning tool here. Explore your legacy options. So a lot of homeowners want to use that equity and spend it on their children, their grandchildren while they're still alive. So you can help your kids maybe pay for their wedding. You can put it towards your grandchildren's education. You can travel more with your family, and it just helps you enjoy some of those precious moments in life that if you don't have the funds to do it, it could be a little bit more challenging. So reverse mortgage can give you all those opportunities. Reverse mortgages can even be used to purchase a home. So what we talked about previously was the refinance version. You convert the equity you have in your home, but this is for somebody who wants to move into a new property and do the reverse mortgage on it, you can actually buy your new property for your retirement years. So the reverse for purchase, it would allow you to, instead of putting all your money down, let's say you have enough to buy cash, you can put less money down than doing it that way. You retain more liquid assets in your savings or retirement versus an all cash purchase. And you still have no monthly mortgage payments, which would feel the same as if you did buy it with all cash. So there's limited income and credit qualifications. This is an easier loan to qualify for than a conventional loan. And you also have the security of owning your home versus renting. So some people would sell their property and say, I'm just going to rent the rest of my life, but this can give you the opportunity to live in the home of your dreams. And we have fixed and adjustable rate options for the homeowner as well. Briefly, we're going to go over this scenario. If somebody sells their home that's worth $700,000 and it's free and clear after their settlement costs associated with selling the property, they might walk away with close to $650,000. So this shows $644,000. If you want to upgrade and go into a bigger home, you can purchase $1 million home. This gives you an idea of what you'd qualify for with a reverse mortgage. Minus the closing costs, you'd be left with about 376. So you'd put down 624,000 to buy $1 million home, and the borrower would still have 20,000 left over from the sale of their previous home. Lastly, downsizing. That's the most common. Empty nesters, widowers, they have a bunch of equity. They sell their departure home and they want to buy a smaller home. So now they buy a 500,000 townhome, let's say. They would have the reverse mortgage loan of about 200,000. So it would take 316,000 to buy that $500,000 home. And that's going to leave them with a big chunk of money left in their savings or retirement account. So reverse mortgages can be used to purchase or refinance a home. We talked about both those options. This is just showing you the example of the reverse mortgage in a graph that just illustrates the growth you get on the available funds in your line of credit. So scenario over here, you'd have a $220,000 reverse mortgage available on a $600,000 home because we go off of the age of the youngest borrower, and that would tell us how much they're eligible for. If they have a mortgage, we pay that off first. And in this scenario, a $200,000 mortgage would get paid off, and they'd be left with $22,000 left at closing they could borrow or set in a line of credit. If you have a free and clear home and you want to take out a reverse mortgage, you absolutely can do that as well. You would qualify for the same $222,000 on a $600,000 home. That would be a line of credit. And let's say you wanted to take $75,000 at closing, you could do that out of your line of credit, and you'd be left with $147,000 left over, an available line of credit. And this is the portion that will grow, the available line of credit that's left over. So if you leave it there, it will generate more and more funds available for your retirement years. Again, just an example of the growth rate. So as the interest rates change, the growth rate also changes. So you'll always get growth on your line of credit. Just if the interest rates are at 6% or 5 or 4, you'll also, it depends, you'll get the same growth rate as whatever your interest rate is on your reverse mortgage. So either way, it's still a good growth of 4 to 7% in today's market. The process of getting a reverse mortgage, very similar to getting a conventional mortgage. We would do income documentation, but it's usually a little bit more simplified. We don't look at your credit scores, your FICO. We look at payment history for the last 24 months. So if you've had derogatory credit, bankruptcy, issues that were years in the past, you'll still qualify for a reverse mortgage typically, as long as you've reestablished good credit in the last 2 years. We need a full FHA appraisal for this particular loan. And if you do have unfavorable credit, we can do a set aside, kind of like an impound or escrow account for your property tax or homeowner's insurance. When the loan is due, and payable is when the borrowers decide to sell the home, or they've both passed away. This is just explaining that the heirs can buy the home back for 95% of the appraised value at that time. So if the housing market goes down drastically before the homeowner passes away, you can never owe more than the home is worth. This is a non-recourse loan, so you can sell the home and recoup all the remaining equity that's left in the home. But if there is no remaining equity because you borrowed all the funds out, or all of your equity, then your heirs are never left on the hook for that situation. They could sign the home over to the servicer, and they won't have any negative ramifications for that. This is just a disclosure stating once you take a reverse mortgage out, the closing costs are added to the starting balance. There's interest on your loan as time goes on. And once you decide to sell the home, you have to pay that all back at the very end. So you really get to live mortgage payment free and really comfortably over those years where you didn't have to make a mortgage payment. Why choose a reverse mortgage? We've touched on all these. There's great opportunity. You can access the equity in your home, turn it into usable cash. No mortgage payment. That's additional cash flow. Your line of credit can give you access to do whatever you want with the money. And you can use it as a retirement planning tool, or even purchase a new home with a reverse mortgage or a new property you want to move into. Why Guild? We have exceptional service. We've been in the mortgage business for 60 years. We do our reverse mortgages in-house, and we service our reverse mortgages. So that's a great opportunity to know you're working for a reputable company. We have a ton of expertise, someone like myself, or there's other reverse mortgage specialists across the country here at Guild, so we can help you from start to finish. And we have all the local support where we do everything in-house, processing, underwriting, and you can meet us face to face if you have any questions about your situation and how reverse could apply. So we hope to be a lender for life if you did a reverse mortgage, and we're here to help. So
Thank you
that's
so
that's
much.
yeah, that's it for the presentation. I'll let Jenica take control now and ask some questions if she has them.
Yeah, so thank you for sharing all that. It's really interesting to hear because we haven't really used them too much. Maybe we've had a couple clients here and there, but very few. So it's interesting to see kind of
Mm-hmm.
the different options for refinancing or purchasing, or I think the biggest thing or the thing that we hear on our side is just that when somebody does pass away and they realize their parents did have a reverse mortgage, then the kids are left with, no equity, or no, they don't have, their inheritance is gone because their parents did that. Are you like, I guess you did have an example sort of on there, but like, what is the typical like cost of that when they, $1 million house, the parents had an $800,000 reverse
Mm-hmm.
mortgage, and then there's costs, and then I guess, how does that work? Or I'm sure that's something you go over in the beginning, but I know that's been one reason where people say, oh, don't get the reverse mortgage.
Yeah, that's a good point, Jenica. So reverse mortgages are different, like I said, case by case scenario. So the homeowner really has control of how much money they take out of the reverse mortgage. But with that being said, it's a very conservative loan. FHA and HUD will lend about 40 to 50% of the home value because they do want a big chunk of equity to retain in the property for if the homeowner has to sell down the road and move into assisted living, they should be able to sell and walk away with, let's say, two, three, four, 500,000 after selling their home. Same with the heirs. There should be plenty of equity. I can't give an exact number of what that is because it depends on how long the reverse mortgage was in place, how much money they took out. Um, but yes, the finance costs, they're built into every reverse mortgage. There's an upfront mortgage insurance fee FHA requires, and that's 2% of the home value, and that's the biggest cost to do the reverse. But that's the protection that's built in that upfront mortgage insurance. So the heirs can really get the best of two situations. They're either going to inherit mom or dad's property that has the reverse, and they can sell it and walk away with a big chunk of money. Um, and then there's also the other scenario where we don't know what the home will be worth when mom or dad pass away. But if the home isn't worth enough to pay back the reverse mortgage balance, the heirs are never on the hook for any negative ramifications for them. So that's really a win-win the way I look at it.
Okay, that's good to know. And then when you say that money grows over time, is it possible that, like in the beginning, you said they'll only lend so much, but is it possible that as time goes on, because they continue to have access to more and more, that they, it does come time to sell and there is no equity? I mean, is that a
Yeah,
possibility too, or no?
that could happen, but if they have a line of credit set up and it's growing, remember that's not being charged interest because that's just available money to them. So a lot of homeowners will do this again as a retirement planning tool, and they might not need to use their whole line of credit. They might only take half of it over the life of the loan. So even though it might have grown to a 500, $600,000 line of credit, maybe they only borrowed 250 from it. There's only interest on the money they take out. So when they
Mhm.
sell their home or their heirs go to sell the property, they're just paying back the amount the parents or the homeowner took out plus interest on that amount. So again, you can see there's typically quite a bit of equity left over in most cases.
Yeah. And some clients, like if they're moving their parents out of their home, a lot of times those funds are then used for retirement homes or different things that are
Mhm.
quite costly and, $10,000 a month, $5,000 a month for these homes. So it's like you just spend it
Yeah.
one way or another when
Yeah,
yeah.
in most homeowners' wishes I've experienced over the years are that they do want to stay in the home and age in place, right? Most don't want to go into assisted living if they can find a way to afford in-home care. So this is one of the main reasons how they or one of the main ways they can afford that in-home care is to stay in the home the rest of their life by using this reverse mortgage line of credit. And that does usually meet a lot of the homeowners' needs. Now, if they know they're going to move out into assisted living, then you really wouldn't borrow all the money out of the line of credit because you have to pay it back, right? You would then
Right.
determine, okay, let's sell mom and dad's home, just pay back just the amount they've taken out, and then they can walk away with all the extra funds to put towards their, like you said, care facility or wherever they would live full time after that.
Yeah. Yeah. Okay, well, that was really helpful. As some of our followers know, we did get recently certified in trust and probate sales too. So we are working
Yeah.
with clients and kind of through that process too, which it is, can be a challenging process, but we're here to guide you through that. And Kyle's here for your reverse mortgage needs. And feel free to reach out to him directly. We'll put his contact information in the comments, and we just want to be a resource for everybody here. So. Thank you for your time, Kyle, and that was really helpful. And maybe if you can email me that slide deck, that would be helpful too. Oh,
Yeah.
I think you do.
Awesome. Yeah. Well, Jenica, it's been a pleasure. I'm glad I could help educate your clients and some of our future clients, hopefully. And I've been doing this for almost 15 years, and I've originated hundreds of reverse mortgages. So, if you come work with us, we'll give you all the expertise and guidance that you need.
Perfect. Okay, well, thanks for your time, everybody. Have a good day.
Yeah. Thanks. You too, Jenica.
Okay, thanks. Bye.